All right, Bulls and Bears, welcome back. We've got some breaking news and a lot of new developments economically, financially, with the tariffs, rising prices, rising costs. We're going to get into it today. We're already seeing one of the biggest things that people buy, one of the biggest valued items, one of the biggest assets, automobiles prices rising already. And the tariffs haven't even fully been impact, or we haven't felt the full impact yet. This is just the beginning, and we're already seeing prices rise. We're going to get into that in this report. A lot of other news, economic details to get into today, how it's going to affect you and me, our money, what the future may bring, but most of all, just the news, right? So let's go ahead and digest it here. Please make sure you're subscribed. Let's go ahead and get started right here. We have Ford announcing price hikes on 3 of its models due to the tariffs. And it's not just price hikes beginning now. Prices are already rising throughout the industry. Let's go ahead and jump over to a chart here. And the headline says, wholesale used vehicle prices increased in April. And let's go down to the chart here, Manheim Used Vehicle Index. See if we can zoom in a bit here. And what do we see? We see an increase, folks. It was rising kind of slowly ever since the beginning of the year. But what do we see last month? Let me zoom in here. A bigger jump up than we've seen over the past few months in used vehicle prices, folks. And we're just hitting stride as far as the tariffs go. I don't think we've hit even full stride yet. I think we're taking the steps on the way to hitting full stride. I think prices are really going to dramatically increase, and we're going to see a lot more inflation throughout the economy than we're going to see deflation, right? When things get overpriced, when the cost of living gets too high, we need a correction. And just the opposite's happening now, folks, with these tariffs. Now, there's people out there still saying that it's going to be better on the other side. We have to have some short-term pain for long-term gain is what they're telling us. Folks, I don't see the long-term gain ever arriving. I could be wrong, and I could be jaded and completely misaligned based on what we've seen over the past 10 or 20 years as far as inflation. And I'd say prepare for this and invest accordingly, right? For those that invested in automobile companies, I told you to be very cautious at this time. Look what just happened to Toyota. Let's go ahead and go over there. And a pretty big hit to the stock there. Toyota just saw a 21% year profit decline as tariffs take bite. That is the headline. World's biggest car maker, 21% decline due to tariffs. Toyota stock falling, tariff impact surprisingly small. That's what they're saying so far. But again, this thing's just getting started, folks. This 25% tariff on imported automobiles just took effect a few days ago. Was it Thursday? And the import tax has already triggered big moves by automakers, from layoffs to pauses in car shipments and price hikes, folks. And we've already seen prices hiked in the used car industry. Well, when new cars are more expensive, the new imported cars, you're going to see a bigger demand for used cars. And guess what? That's going to make prices go up for used vehicles as well. We also have parts for materials. A lot of them are imported. So when you have an auto accident, your repair costs are going to be up. So guess what's going to happen to insurance rates? If they weren't high enough already, folks, insurance rates are going to go even higher. And then what happens when everything becomes more expensive? People are going to demand higher wages. And then that makes the businesses charge even more so they can cover the higher wages, folks. It's just, it's a snowball effect, folks. And I'm afraid to see how bad this is going to get before it gets better. But then worst case scenario, what if it gets bad and doesn't get better, right? This could be a complete obliteration for a lot of people that aren't really careful during this time. And we have Jay Powell and his crew out there saying they're going to wait and see if something bad happens in the economy. So is it going to be rate cuts as soon as something bad happens? Well, what if that something bad happening is drastically rising inflation? Do you think rate cuts is going to help drastically rising inflation? No, it's actually going to make it easier for people to borrow money. The payments may be a little lower on these overpriced assets, including vehicles, but then that's ultimately going to push prices up even higher because people will have more borrowing power more spending power with lower rates. So what are they going to do? And are they waiting to see something bad to happen just to cut rates? They need to raise rates. That would be even better. But does anyone think they're going to do something that's better versus the wrong move? Of course, they always make the wrong move, right? I mean, at least you can give them a little credit for raising rates over the past few years. It could have been even worse than it is now. But something tells me that they're going to make the wrong move, and it's going to get really, really painful for a lot of people. Hopefully not a lot of people on this channel. Hopefully we're doing well. Investing because we're ready for this. If you've been investing in some of the things we talked about on this channel, look at what's happened with gold. Gold's outperformed everything, folks. Real estate, the stock market, you name it. Gold, well, there's a couple assets that it hasn't outperformed, but the major things that people invest in, gold has outperformed. And, looking back, you've got to mention some digital assets have really went crazy over the past few years, and I've got some of them. So keeping my head above water. Hopefully you're doing the same, keeping an eye on all this stuff, watching the news, watching the trends here. But look at some of the news out there, some of the headlines. Freight waves. Is the U.S. economy about to collapse? With so many fingers pointed, with so many targets, the Q1 GDP data must have been an absolute disaster, right? Well, no, we talked about that here. Remember, GDP is just based on how much, not just, but mostly based on how much money people can spend. And in this case, borrowed money, it's mostly borrowed money. When you see the number, the gross domestic product, the GDP, it's mostly borrowed money that's being spent into the economy. And they use that to tell you how good the economy is actually doing. But in the background, it's most people just taking on a bunch of debt. And here's how NBC put it: higher prices for fewer jobs. The economy faces a no-win dilemma. U.S. trade deal could help UK economy, but it won't transform it. Market Watch: why the U.S. economy might be able to handle any disruptions from the tariffs more easily than Wall Street expects, right? So you've got a combination of dire predictions saying that everything's going to get worse. I kind of think it is. I do think that ultimately it will get better, but I think we're going to see some major financial pain. And I think it could be more prolonged than we previously thought as far as the pain and the hard times, right? Unfortunately. So I would say buckle up and prepare for things to get a lot worse. All right, people, now let's jump over to real estate, folks. The housing bubble, home prices, a lot of people keeping an eye on these things. A lot of first-time home buyers are just priced out of the market. They're waiting for things to become more affordable. A lot of people moving to specifically Rust Belt states like Ohio, Indiana, others over there, even out in Iowa, the Corn Belt, looking for affordable housing. And even homes over there are getting bid up, especially in the metropolitan areas. Take a look at this here. Recent headline: home price growth in the first quarter jumped in nearly all U.S. metro markets. That's the key word, metro markets, folks. Overall, home prices are dropping. If you look at the whole nation, not just looking at the metro areas where most jobs are, naturally where most jobs are, especially coming out of the health crisis, people initially moved out of the cities. Now they're moving back into the cities. So we're seeing the reverse happen. We're seeing prices go up in cities, but drop in some of the more country, in the outskirts, the boondocks, if you want to call it that, the farmland, the country area, countryside. So prices up in most metropolitan markets. Let's take a quick look at this, but then let's look at the home price big picture across the country here. And they're giving us here, out of the Mortgage Point, they're giving us the metropolitan areas with the largest percent gain. It's not the usual cities. It's other cities, but still downtown areas that are seeing big gains. Ohio, Toledo, Ohio, up 11% year over year. We've talked about here many times about how many people are moving to Ohio because that's one of the few affordable states left. Cleveland also up 11%. Trenton, New Jersey, 10%. Syracuse, New York, almost 18%. Wow. Nassau, Suffolk County, New York, 12%. Let's look for the other big ones here. Montgomery, Alabama, 16%. Youngstown, Ohio, a lot of Ohio towns, Youngstown's up 13.6%. Allentown, Pennsylvania, right next to Ohio, we've got 10.2%. So you all get the picture on that. But take a look at what's happening nationally, not just focused on metropolitan areas. And this was updated about a week ago. Let's go ahead and go to a 5-year chart so you can see the decrease ever since the peak there in the fourth quarter of 2022. This is Fed data here. 442,600 at the peak, fourth quarter 2022. We saw it drop, we saw it go up, we saw it drop, we saw it go up. Overall, though, we're down now to 416,000, so just under 417,000. So we're down a bit from the 442,000 to 417,000. Not really enough to get somebody into a home that probably couldn't afford it before, maybe a few people, but it's not significant enough, I think, to cause a mass influx into housing because things are becoming so much more affordable. It's not really that big of a move compared to the increase that we've seen over the past 10 years. Let's go ahead and bring up a 10-year chart here. I mean, come on, this is massive, folks. We've barely given up any of the gains that we saw starting in 2020, where it was 317,000 median price. So we're still about $100,000 over where we were before the onset of that health crisis, folks. So $100,000 higher than we were about 5 years ago now. So not much relief in sight for these housing wannabe buyers, right? Or people wanting to move up to a larger house. And tell me what you think is going to happen with the imports and now lumber imports really going to go up in price. So the cost to build a home is going to go up. When the housing bubble went bust in 2008, 9, and 10, part of that, not all of it, but part of it was because we built a massive number of homes, right? We're not seeing that now, but we are starting to see some things develop in housing that you might want to pay attention to. In fact, listings are at a multi-year high. Let's go ahead and take a look at this. And here was the headline over at Realtor. Home listings surged to 6-year high, and cautious buyers are holding back. With everything happening right now with the prices where they're at, plus the threat of higher prices, you would think more people would be jumping in, afraid that home prices were going to rise more, but also you have people worried about getting laid off, losing their jobs, slowdown overall in the economy. So you've got more cautious optimism than you have people trying to jump in front of the higher prices, right? Trying to FOMO, fear of missing out, right? Trying to get into the homes before prices go up. The spring housing market is in peak bloom with the number of homes for sale soaring to a 6-year high. However, many buyers burdened by affordability concerns remain on the sidelines. The overall U.S. housing inventory surged during the week ending May 3rd, and it's up 31.1% compared to a year ago, reaching the highest level since 2019, according to Realtor. To put that into perspective, more than 1 million homes were listed for sale last week, crossing the 7-figure threshold for the first time since December 2019. This marks the 78th consecutive week of annual increases in active listings, right? So is the tide turning on this housing market? Is the housing bubble in trouble? That rhymes. Is the housing bubble in trouble, or are we just going to see higher prices because all the inflation that we're going to be seeing with the tariffs, folks? So this is it's a mess, and it's not easy to figure out what's going to happen. It's not easy to sort out. Maybe you can give me your prediction down below. I'll try to read all your comments on this. If I get 1,000 thumbs up on this video, I will read all your comments and I'll reply to the first 50 in this video if I get 1,000 thumbs up. So let's get it moving if you can, and I'll see you down in the comments. But let's move on to a couple other things here. I want to, let me stay on real estate real quick here. Jump into this thing here, this chart. And we've got the active listings here, and we can see in November it jumped up to 952,000. Well, we just passed that in April. We have about 959,000, and so we're right just under 1 million. And if you look back, we haven't seen this level since just like they said in the previous story, going back almost 6 years ago now. Right, so very interesting. Things are moving in a slow direction in housing, But what's going to happen to home prices? Will home prices go up even more? Or will they continue to come down? Is the trend going to reverse? The trend is down, unless you just look at the metropolitan areas. If you look at the entire nation, all areas, prices are coming down. But will we see prices actually starting to go back up this year? It's going to be very interesting to keep an eye on it, to say the least. And something I forgot to mention earlier in the video when we were talking about vehicles and car prices. Used car prices just jumped to the highest level since 2023, folks, because of the tariffs. So this is something that many people did not expect. They didn't expect prices to start going up this quickly, this early into the new administration. What is it? Just over 100 days now. We were told things were going to get more affordable on day one. Then the first month went by, second month went by. Now we're 3 months plus, and it only looks like prices are going to go up from here. But of course, what they'll likely do, what the talking heads will do, especially people on the right, is they'll say, look how strong the economy is. Prices are going up. That means everybody's rich. Everybody has money to buy these things, and they're bidding prices up, when really it's the tariffs as a big part of this. It is the supply chain, the shortages are going to really fuel, I think, price increases. And will we see the empty shelves, right? We've been hearing about empty shelves for a while now. I was at Costco recently. Seemed a lot more busy than usual. I think a lot of people are stocking up on items, preparing for the shortages. Remember 2020, we saw that panic where people thought there were going to be massive shortages when the supply chain was threatened. And we did see some supply chain disruptions back then. But what we're seeing now and what we're about to see in the coming months, hopefully not years, in the coming months though, what we're about to see, will it be worse than 2020? Will we see inflation go up even more than we saw, or will we see prices go up even more than we saw from 2020 to 2025? Will home prices go up? Will they double from here? Will the median home price be $800,000? I mean, on one hand, I'm joking, I'm laughing, but on the other hand, I'm like, I mean, things are getting crazier all the time. So maybe the things that sound unrealistic aren't so unrealistic after all. And then some people laugh at me. They'll say, ha, 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 home prices can never get that high because nobody can afford it. Well, if they put a freeze on foreclosures, then it really doesn't matter. You remember what they did in 2020. They put a floor under home prices by implementing all these rescue packages and rescue programs. I'm not saying they're going to do that again, folks, but do you think they're going to allow the markets to collapse? Right? Just like the stock market. People said that was going to collapse. I said it's going to drop, then it'll probably get pushed back up. I think there's going to be a longer-term downtrend in the market. But I did say here, and I think most of you probably knew anyways, that the market was going to be propped back up by the powers that be. Anyways, let's go ahead and jump over into some other news here. We've got Krispy Kreme here out of CNBC. Krispy Kreme stock plunges after the donut chain pauses McDonald's rollout. Isn't McDonald's unhealthy enough without having Krispy Kremes there? So they were going to implement all these Krispy Kreme donuts into the McDonald's menu, but they're pausing the nationwide rollout with McDonald's after sales slowed below its projections. I guess they started it off at a few locations, but nationwide, they put a pause on that nationwide rollout. Look at this, though. Krispy Kreme shares have shed more than 70% of their value since the beginning. Or actually, since just the 1 year. 70%, folks. I would never invest in an item that's strictly like that type of food, that type of, I don't want to say junk food, because some people will be offended, but I don't want to invest in a company that just does one thing, just donuts. I wouldn't do that. The two restaurant companies are working together to boost demand and simplify operations. And after that news came out just recently, the stock plunged 24%, folks. So we're down big time. If you're in that stock, you're down big time. Hopefully you weren't in that stock. I used to love getting me some donuts, some of those like, what do they call those, Bavarian, something like that. It's been years. I used to get like 2 donuts and 2 things of milk, those little cartons of milk. What was it, a half a quart that we used to get at school? You opened up the top and You know what I'm talking about? I used to love eating some donuts, folks. And then I got in my health kick and then kind of stopped eating that stuff due to some health issues. Had to kind of really watch my diet. I had a milkshake the other day. I think I talked about that. $6 milkshake from Jack in the Box. I'm not going to eat one. I'm not going to have another milkshake probably for another year or two, if that. Anyways, let me know what you think about all this. The car prices going back up already. The tariffs already causing havoc with car prices, folks. Real estate inventory going up. Prices up in the metro areas, but down overall. What's going to happen this year with home prices? I'll read your comments on this one here. I'd like to hear from you, everybody. Let me know what you think about this. Please make sure you subscribe. Keep this channel operational. Thanks, everybody, for being here. As always, keep stacking. Bye for now, people. See ya.